Now on Wall Street, the Dow and S&P 500 rebounded from a rough start as investors await details of President Trump's tariff plans on Wednesday. The Dow added 417 points, the Nasdaq was down 23 points at the close, and the S&P finished the day up 30.
All right, for more on the economic impact of President Trump's tariffs, we're joined here in the studio by James McBride, a certified financial planner with the McBride Group. And James, it is good to have you here. Thank you for the time. We saw what the markets did today. They rebounded a bit, but broadly speaking, it has been a tough couple of months here. The S&P 500, I was reading, just recorded its worst month in more than 2 years, falling 5.8% in the month of March. We have talked before here about how a lot of this has to do with the fact that investors don't like all of the uncertainty surrounding the president's tariff policies here. Is this just about sort of the haphazard way they have been rolled out, or is this really about the impact that these tariffs are going to have, what they could mean for inflation and consumer spending?
Tariffs are bad.
Okay.
Nobody likes the tariffs, and tariffs are going to inherently, all things being equal, raise inflation and slow down economic growth. So that's the backdrop of what's happening. Then you add in, just like you said, the uncertainty, the back and forth coming out of the White House is unnerving. The old expression is, and there's a lot of truth to it, is that Wall Street hates uncertainty, and we're getting a tremendous amount of uncertainty around tariffs.
Well, how will these tariffs affect interest rates? Goldman Sachs has signaled that it expects the Fed to help the economy by cutting the interest rates 3 times instead of 2.
Well, if the tariffs raise inflation, the Fed is going to be very hesitant to lower interest rates. In fact, they're going to be almost compelled to do the exact opposite, which is raise interest rates to tap down inflation. But the Fed has what's called a dual mandate, price stability, but also full employment. Well, if you raise interest rates, that typically depresses unemployment or employment, however you want to look at it. So the Fed is going to look at the numbers and try to make the best decision. But again, the backdrop of tariffs are not healthy. I can't find an economist that works 2 feet out of the White House that thinks that these are a good idea.
All right, and this coming Wednesday, as we've talked about here, President Trump is expected to unveil his latest round of tariffs, what the president is framing as Liberation Day. He's going to roll out reciprocal tariffs. He's going to roll out delayed tariffs against Mexico and Canada, and this next round of, or I should say this first round of tariffs on all imported cars. Once we sort of see the unveiling of these tariffs, does that provide any more sort of certainty and clarity for investors? Are we likely to see an impact in the markets here later this week?
The White House seems to refuse to say that they're going to keep these tariffs in place for a long time. And then the undercurrent of that is that the president is using the tariffs as a bargaining chip. But to go to your point earlier is that just brings a lot of uncertainty into the market because we don't know, we as investors, we as citizens don't know how this is going to go. But the bottom line is tariffs are a tax on consumers, and that's not going to be good.
We've seen consumer confidence on the decline in recent months. What do you think this signals about the potential economic impact and consumer behavior?
Well, the consumer confidence number is kind of a weird number in the sense that consumer confidence has been below the 50 mark for the last 2 years. But the last 2 years were 2 of the best years in the stock market. So consumers are uneasy, but they keep spending. When I was at a conference this week in Las Vegas, the chief economic strategist for JP Morgan Bank, Dr. David Kelly, was saying one thing about the consumer is that they never say no. So people are, sort of compelled to spend, which is kind of important because consumer spending is 2/3 of our gross domestic product.
Yeah. Sure. What about this analysis that came out over the weekend by Goldman Sachs offering a pretty pessimistic outlook on the economy? They're now giving us a 1 in 3 chance, essentially, of slipping into a recession here. Do you agree with that assessment, and how concerned should all of us be about that possibility?
Well, it's scary to me because we think of Goldman traditionally as being very optimistic about the economy. And Goldman started the year by saying the S&P 500 would close this year at 6,500. But twice this month they've lowered their forecast, first to 6,200, now to 5,700. Well, 5,700 says that the S&P is going to be negative for the year. That's not a good sign. And there's a lot of, as you know, fear out there. Which way are things going? And we've been in a very good market for a very long time. So the question is old age and fear going to take this market down? And the answer, I believe, is no. What takes down a market is hubris and policy mistakes. Tariffs are a policy mistake. No way around it, okay? And why people think that tariffs are going to magically recreate the manufacturing giant that was the United States in the 1950s, in my opinion, is pure hubris. So I think Goldman Sachs is right to warn us that things could go south.
So it sounds like you're, what Trump is saying about tariffs leading to a more competitive domestic manufacturing market may not happen.
And I think he's got a better chance of seeing Elvis. Not going to happen.
James McBride, we appreciate your insight and expertise. As always, thank you so much for joining us.
My pleasure.
Afternoon.
Download Fox Local for more videos on demand.